guys. What's going on? Everyone hear me okay? Man, what a fumble bag. I literally sniped the fucking low on Tesla, man. That's crazy. Crazy. And the higher low. Literally two 2Xs. 2X, 2X, 300%. Crazy, crazy, crazy. Okay. Can you guys hear me all right? Let me know if the audio is okay. Cool. All right, guys. So I know it's been a little while since I've done a Haven specific video. Obviously, I've been doing the back testing videos. I did the raid candle video, but I haven't done a Haven specific stream in a while. So I wanted to get one of these going for you guys and get back to being a little more consistent with them. So no real plan here, guys. This is not going to be just me looking at a bunch of charts. The only thing I wish was that I left my SPX short open. So as you guys know, we shorted like the fucking top here. Shorted up here on this 12-hour breaker, right? We shorted this and we caught, a 100+ point move to the downside. But when I saw these sweeps starting to happen, I thought maybe momentum was shifting a little bit. But I was wrong. I was wrong. It's still weak as fuck, and it's down another 50 points from where I closed, which is just crazy, insane weakness. And this does not bode well for Bitcoin, right? Look at the dollar. Dollar is making new highs here. Again, pushing through here. As I said, who was bullish on the dollar? Right? Who was bullish on the dollar? Fucking nobody. Like me, Trader SZ, Trader XO. That's it. Bullish on the dollar down here. I said up into here at least. I drew out the market maker buy model, right? I posted the chart. People were like, no, man, the dollar's going down. It's fucked. It's going down. Well, doesn't look so fucked now, does it? Looks really fucking strong. So we have the dollar with the huge reclaim. SPX looking weak as fuck. And Bitcoin fucking failing to, to go higher, right? Like this is not, in my opinion, this is not super bullish, right? This looks to me like declining momentum. So the bulls really need to get above 30,000 and they need to hold there. But we have tested 29,000 several times now and we've gotten no bounce, really. So you draw a line at 29K right here. You can see, look at all the tests of 29K. Eventually that level is not going to hold anymore, right? Like visually, just look at it. How long does that level hold? Right? Same to this level, right? Remember this level? Test, 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 finally broke. So this does not inspire a lot of strength, especially based on what the dollar's doing and what the equity markets are doing. Like this looks like it's topped, or at least setting up for much larger correction. We're into some demand here. So the bulls need to step in if this is going to continue higher. But if this is going to have some long, multi-week, multi-month, perhaps even correction, remember, we went up for 1, 2, 3, 4, 5 straight months. We could have 2 or 3 months of down and then still put in a higher low. But if that happens, where is Bitcoin going to be? Because relatively, it's quite weak. So not the greatest look. Probably should have left a little bit of my short on, but it is what it is. This is interesting. Just received an email from the FBI about FTX. That's crazy. Okay. Where was I? Yeah, so not inspiring a lot of strength. Not inspiring a lot of strength, right? But I'm not really going to talk about the charts right now. The only trade for Bitcoin that I'm potentially eyeing right now is just a Monday's range play. Right, so we're back above Monday's low. We've had the H12 SFP. If we can get a market structure break, which means a close above 29,175 on an hourly candle, so failed to close above there, didn't close above here, then I'd be interested in taking a long. Right, that's the only trade I'm looking at here. But we'll see. I'm not forcing myself into it. I'm still holding my swing short from way up here. Okay, still holding that swing short that we entered literally a month ago. So I'm still in that trade. I have no long exposure. I am long on Rollbit because I took the Monday's range long here, but I took it on Rollbit and I made my bust priced here. So I didn't get stopped out technically, but I should have closed it when we closed through, but I saw it close as an SFP, so I'm just letting that ride. So this is the same position that I took on stream yesterday. So I'm still holding this trade, you can see. But anyways, if we MSB here, I'd look to compound or take a long on another platform. But this is meant to be more of an AMA because I want to take the system with you guys to another level. I want to take the system with you guys to another level and kind of add some additional pieces to the puzzle. And to do that, everyone needs to have a pretty good grasp of the basics, right? So I didn't want to kind of continue until I'm sure that, you know, the majority of you have a good understanding of the system as I've taught it. So obviously, we can have the camera on. You guys can look at my ugly face by Shana Punim. Obviously, it's going to take time, but some of you are definitely picking up on it just from being in the chat, seeing the charts you guys are sending, the questions you're asking, the questions you're answering for other people about the system. I can tell some of you are really getting the hang of it, which is great. So keep it up. And for those of you that are still struggling, it takes time. It's going to take some time. And as I said in my long-winded message yesterday, it's there's only so much I can show you mechanically. Some of the stuff you're just going to have to learn by doing. The emotional sides of it, some discretion, right? There's going to be some trades that tick the boxes that you're not going to want to take because you've seen it form in certain situations before over thousands and thousands of examples where it doesn't work as often as other ones, right? So there's certain things that are discretionary and subjective that I can't teach you, right? The back testing videos help a little bit because you see me kind of logicking it out in real time, but it is what it is. Whereas what I can show you are some further tools to better refine the system, okay? And the main way that you're gonna do that is by incorporating more time frames. So the reason I started with just the H12, H1 is it is as simple as I can make it. You only have to look at 2 time frames, okay? Only have to look at 2 time frames to make your decision, and that's it. Don't worry about the weekly, don't worry about the 3-day, don't worry about the 5-minute. You're looking at the 12-hour and the 1 hour. But the way that you can make the system, the H12, H1 system even better is where is that H12 range forming relative to the weekly range? If you're doing the H4 and the M15, where is that H4 range forming relative to the 12-hour or the daily range? So if we are in, if this is our, okay, if this is our daily range here, and then we're pulling back like this, and then within this daily range, so we come into our order block here, okay, this is our daily range. If you find in this daily point of interest, okay, so this would be your daily order block and your daily bullish range. If within here, you find on the H4 a bullish range, right? So this is your daily, this is your H4. And then you have your H4 POI, okay? And then in here, you find your M15 trigger or an H4 sweep or whatever it is. The hit rate of the H4 M15 system is going to greatly improve because you've taken that extra higher time frame order flow / directional bias into consideration. Because technically, within this daily bullish uptrend, you could find bullish H4 ranges here, 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 right? And some of them will give you a trade, but some of them won't. And you'll be like, well, what the fuck? Because in reality, the H4 just dictates the daily. Like if the daily wants to go up, it's going to do its daily pullback and then it's going to go up. So the place that the daily is going to have the highest hit rate of turning around, or sorry, the place that the H4 M15 system is going to work the best is finding that daily point of inflection. So adding that extra layer, and I'm going to do an entire video on this, but this is kind of the essence of it. Sorry, one. Sorry about that, guys. Okay, but this is kind of the essence of where I'm going to take this next. And I'll do a video with a bunch of examples and a more in-depth explanation. But I started extremely simple, right? And then I'm going to add layers and layers and layers. But without understanding the basics of this part doesn't make as much sense. But once you get that all of these time frames work together, you can literally start on the weekly, go down to the 12-hour, go down to the 4-hour, go down to the hourly, go down to the 15-minute and find a killer high probability setup using all the same logic, but then folding it in across all of those different time frames. Anyways, Let's get to the questions here. So, what's up, Andy Candy, Joe, SJ? How you doing? G. Okay. Joe says, have you done any testing on entering sexy SFPs right away on the close versus waiting for a market structure break? So, I guess, what do you mean by sexy SFPs? Are you saying entering as soon as the candle SFPs before you get the MSB? I think is what you're saying. Well, here's a perfect example. I did that yesterday. I entered as an SFP here of Monday's low before we had an MSB, and look what happened. You could have done that again here. SFP, you enter before the MSB. Didn't happen, right? Whereas here, I'm waiting because if we get the MSB, the likelihood of my trade working out is massively higher. So to answer your question, it's similar to the logic behind the raid candle. If you enter without confirmation, your strike rate will be lower, but the trades that you do get right will be a higher RR. Okay? So if you have a lot of things in your favor, the SFP could work out, you get a way better entry. But what I would tell you to do is instead of doing this, okay, don't just enter on the SFP. Rather than just entering on the SFP, look for the market structure break on a lower time frame. So if I zoom into the 15-minute here, we've already MSB'd, right? So you're getting in earlier than the H1 MSB because on one time frame, the MSB occurred. Look, the MSB on the 1 minute, it already MSB'd. There's your SFP. So you could argue, well, hey, I'm entering here. H1 MSB, H1 sweep. This is the exact moment the SFB happened. So rather than just saying, hey, I'm just entering on the SFP, if you want to get in sooner, you can simply zoom in to a lower time frame to get that confirmation earlier. Why is it saying that it's not getting enough VI? I literally streamed yesterday with no issues. I hate this. I hate fucking my internet today has been fucked. I'm just going to give it a second to see if it works itself out. Is it going now or is it still lagging? I don't know. How could it not be? Doesn't look like we're back. It looks fucking cucked still. Okay, well, you guys have to let me know if it's fucked. Okay, but Joe, hopefully that answered your question. Yeah, so let me know if it didn't. Joe has a second question. He says, mind talking about how you use FVGs as targets, entries, gap fills. I don't really use fair value gaps that much. They're just another PD array. Like, where's a good example? Okay, so on this short, right, here, where I'm using the breaker as the entry. Well, in reality, we also have this fair value gap here. Okay? And then when you zoom into the hourly here, you could say, okay, well, the actual entry, the really dialed in entry, the one that broke market structure is this hourly fair value gap, right? And you can refine it that way. You say, okay, I'm entering based on the hourly fair value gap. So what I find is you're going to have your order blocks, like if you're looking at a good area, the order block, the breaker, and the fair value gap generally are going to overlap each other and be in the same area. Now, the times where I primarily use fair value gaps are not for entries. If you watch some of like ICT's, most recent shit, he talks about using the fair value gap for your entry. So you could see an example right here. Right? So you have a fair value gap from here to here, and that was your entry, right? But to me, the risk is either right above the fair value gap, which I don't know if that works there, or here. Well, to me, I'm using the breaker. I'm getting the same entry. Bearish order block, you're getting the same entry. So they kind of all overlap with each other. My favorite entry point of interest is the breaker. I like entering on the breaker, but your breakers, your order blocks, your all those POIs for entries, pick one that you can consistently spot and that is giving you the setups that you like, and just stick with it and practice it and master it. You do not need to master all of them. There's fucking 12 different types of blocks and all this different shit. So in terms of targeting, I like using FVGs in instances like this, where, okay, if I'm short here, if I'm short up here, oh, why did I do that? I didn't want to do that. Right, like I'm short here, right? Well, where am I targeting? I mean, the high time frame point of interest is this entire zone, right? So in an instance where we have this really inefficient price leg, these types of gaps, right? These huge inefficiencies in price from there to there, from there to there, they tend to get filled. So they can be used as an area to target. If I'm short from here and I'm looking left and it's a very thin move, I can assume that we're probably going to fill some of these gaps to the left. But primarily what I'm using for targeting is old highs and old lows, and then points of interest, right? That fair value gap, it's the same area as, again, the weekly breaker, right? So you could say, okay, well, we have a weekly fair value gap from here to here, zoom into the 12 hour. Well, what is within this weekly breaker? It's the same shit, right? You're just refining it to a different POI, but they all kind of overlap each other, as you will notice as you start to deal with this shit more. But yeah, hopefully that answers your question there, brother. If it didn't, I'm sorry. Okay, let's go to the next question here. What's up, Trader Zane? Okay, G says, if you're trying to re-enter Rune for a short setup, where would it be? As well as, what is the breaking point for BTC in your eyes? A daily close below 28.5. Okay, we'll start with your Rune question. So, I mean, this is a tricky one because this thing's gone on a crazy rally, right? So if you're looking at the H12, where's the range low? Here, right? So there's not a lot for me to go on here. I would wait. If I'm trading this based on the H12, what I would look for is for price to close below here, okay? And then this becomes a 12-hour bearish order block. I guess this is the range low. Excuse me. Yeah. So yeah, this is what I would do. Excuse me. So here's your low, here's your high. I would wait for price to close below here, right? Which would make this a 12-hour bearish order block. So I'd want this candle to close like this, or the next one, but I want to see a close below here. Right? And then I would look to sell a bounce up into here, and I'd look for a short trigger in here on the H1. That's what I would do if I was trying to short Rune right now. Or get an entry to short Rune. Otherwise, there's nothing really doing for me. Here, the range is very tight. Either that, how I just explained it, or if we get a sweep up here, then I would short. But otherwise, I would wait for this to break down, and then I'd short the retest. So we'll just draw this on there, see how it plays out in the future. Second question you had was, what is the daily close breaking point for BTC? I don't really have a breaking point, right? Because to me, this is just the range low. This is the range high, right? So to me, a high probability trade on Bitcoin comes below here or above here. And again, if we lose this area, I think we just fill this in. So yeah, you could say a daily close below the range low. Yeah, then I probably think we trade another $1,000 lower at least. But I don't consider it like a breaking point. I don't really know what you mean by the term. But this is our current range. I'm interested in trading in the lower half of the range for longs. Maybe that's a sweep, I don't know. Or the upper half of the range for shorts. Maybe that's a sweep, I don't know. But we're kind of just diddling around in the middle right now. Wow, that line came out super straight. Could I even replicate that if I tried? No chance. Wow, like a robot. But yeah, daily close below here, this becomes a bearish range, and then I'm looking to probably, so let's say we get a daily close below here. Okay, well then this is your range high, here's your range low. The next bounce, I'm looking to sell into this fair value gap. Okay. Hello, Alexander. Would be very appreciated, as I believe Room is super overbought and could make a killing on short, as well as BTC being the main catalyst here. Well, there you go. Hopefully that answers your question. Trader Zane, if all you had was a 20K account to extract the most value in the next bull run, would you focus on trading or spot and hold? So that's a hard question to answer, Zane, because for most people, you're never gonna, let's assume that Ethereum's at 2K right now and Bitcoin's at 30K, just to make the math simpler. Let's say that in the next bull run, Bitcoin's going to 100,000, okay, and Ethereum's going to 10. So Bitcoin's doing like a 3.5x, and Ethereum is going, let's say Ethereum goes even higher. Ethereum's going to 20,000. Ethereum's doing a 10x and Bitcoin's doing a 3.5x. So in Bitcoin, your 20,000 becomes, 70,000. In Ethereum, your 20,000 becomes 200,000. What is the likelihood that you, knowing your trading abilities, is going to do either a 3.5x or better yet, a 10x on your money? Probably pretty low. Right? That's safe to say. If you could consistently 10x your money trading, give me a call. I got some money you can manage. As does any hedge fund, if you have proof that you are that good. Bitcoin did a 20x in the last bull run, right? Did a 20x in the last bull run. What are the odds I didn't do a 20x? On my entire stack, I didn't do a 20x. So I would have made more money if I would have just went all in on Bitcoin than trading. But I bought some spot, I traded some altcoins. I still did very well, but I didn't do a 20x on my entire stack. I had individual investments that did 20, 30, 40, 50x. But in terms of my entire stack, because you're saying going all in, probably not likely. The problem is things are getting more expensive. So Bitcoin going to 100K, which would be amazing, is only a 3.5x. Ethereum going to 20K, which would be nuts, is still only a 10x from here. So when the dollar amount you're dealing with is lower, if you're going to do the spot game, well then what is your goals? Because if you're saying how much money do you need to make for that to be successful? If that 20K becomes 200, is that a success? I'd say, yeah, but if you're saying I need this 20K to become millions, the only way you're going to do that is either you trade phenomenally, like insanely, probably very unlikely, or the spot that you're buying is in some like lower cost shit coins that have more upside potential, right? Because in the majors, in the Bitcoins and the Ethereums, there's only so much multiples that you're going to get. And on a small amount of money, you know, maybe that's not enough for you. So I don't know if I answered your question, but I tried. Name of the tune. I literally just typed in Deep House on YouTube and clicked the very first link. Working with a few multiples of that, and I would not spot buy TraderMade. Okay. You say your system is mechanical, but what are the parts that make you successful and a computer can't replicate? I kind of touched on it earlier and in that post yesterday, right? The habits and psychological shit, right? So the habits are formed through experience, as is the psychological parts. You know, doing your chart art, right? Getting in every day, looking at the charts, marking out your levels, setting your alerts, you know, having those good habits. I also include taking care of yourself, getting enough sleep, working out, eating healthy, having time away from the screens with family, with friends, socializing, being active. All of those things, in my opinion, directly affect or indirectly affect your trading. And then the mental game, right? The ability to use discretion and then to handle the roller coaster of emotions that you will be on in a day-to-day basis while in a trade. I had a long earlier, that long that I posted, it was down. So this is the long I took on stream yesterday. So earlier today, I was down 3,000. Okay. Then like a couple hours ago, I was up $300. Now I'm down 1,400. I'm not phased, right? Like I know where this trade idea is where I'm cutting it. So I don't care, right? But for someone new, that's going to stress you out. Seeing it be up and down. Oh, fuck, I'm down 3,000. I better close. Did it cross my mind to close when I was down 3K? Of course. But what happens if this, fuck you. So when I was down 3,000, we were trading in this wick. But we ended up closing as an SFP. And then what happens if now we do this? How pissed are you going to be that you closed basically in the wick, right? You're going to be livid. So again, these are things that you cannot learn any other way than by doing. It's the only way you're going to learn that kind of stuff. So the stuff that the robot, the computer cannot do is the human element, right? The subjectivity, the discretion, the psychological warfare. And that just takes years of being in situations. It's no different than anything, right? I always liken it to sports, because it's such an easy analogy. If you can take 10,000 free throws, right? Sorry, I got a dog sitter coming. One sec here. Because I'm busy all day. I need someone to walk the poo. God, could things be happening at a worse time right now? Dog walkers here, the market's dumping, I'm streaming. Okay. But yeah, so if you're taking 10,000 free throws, right, in practice, in the gym, oh, we're getting fucking nuked. God damn. No market structure break, right? So no long trigger there. But my roll bit long getting crushed. Might get another sweep here. Remember, this is all still the same 12-hour candle. We need the daily to close above this low for this to not, to look really bad. But again, like this kind of shit, staring at the chart, watching your P&L fluctuate, that's stuff that you only get through experience. So if you take 10,000 free throws in practice, when it's game time and you're at the free throw line, it's automatic. You're not worried about the crowd. You're not worried about the pressure, right? Obviously, an element of the realism of the game and having the stakes of the game, being, it's real. There's points and stuff like that. That stuff needs to be replicated too, right? So you can't just back test and then expect to execute perfectly in the real market, right? But all of this stuff is gained through experience, and it's gained through seeing situations over and over again and then doing the same thing every time. If you take all of your free throws with your right hand and then all of a sudden it's game time and you try and shoot with your left, what the fuck do you think is going to happen, right? So hopefully that helps here. I'm just trying to deal with my dog walker here, guys. Sorry, one sec. Sorry, guys. I hate to do this, but if you can just give me a minute here, I'm just going to run my dog downstairs to the dog walker, and then I'll be right back. Put on some beats for you.
Baby, you try to trick me with your lies. Darling, I knew I never should trusted you that day, but the words you said were smooth. You always had a silver tongue, didn't you? Under a spell that you had cast on me. Fall in love with you like the rain pouring. Fall in love with you like the spirit calling. I know in myself I need to get out.
running around doing that dirt all on my name. Cause you knew that I'd call you up. You've been going around every party in LA. Cause you knew that I'd be at one. Oh, I know that dress is karma, perfume regret. You got me thinking about when you were mine. Oh, and now I'm all up on you, what you expect. But you're not coming out with me tonight. You just want attention, you don't want my heart. Maybe you just think I thought I'd be with someone new. Yeah, you just want attention, hiding from the start. You're just making sure I'm never getting over you. Running around, doing that dirt all on my name. Cause you knew that I'd call you up. Baby, not away, right here, standing face to face. You already know.
Sorry, guys.
Know that you want. Oh.
Didn't mean for that to take so long. Dog sitter parked in the wrong parking spot, and then her fucking she locked her fucking dog in the car. I don't know, fucking mess. So I just have to quickly register her car. Okay. So, yeah, we're dumping a little bit here. Again, right? Dollar strength, weakness in equities, just not a great look for crypto here. Probably going to cut this Rollbit trade here if the hourly closes down here, because this looks like it's just about to puke. But it's okay because remember, I'm short overall, so it's not the end of the world. Okay, let's get back to questions. Hopefully, Trader Zane, that was a satisfactory answer for you, brother. Okay. Yeah, this just looks awful, man. Like AIDS. AIDS. Do I give it the rest of the hour? Okay. Maine, thank you for the back testing videos. How do you make provisions to stay with the long-term trend with your SFP? Not every breakout will fail. Do you flip direction if the SFP or OB is flipped? I don't fully understand your question. How do you make provisions to stay with the long-term trend? I mean, I would focus on the high time frame chart. So as long as the points of interest, so order blocks and things like that in the direction of the high time frame trend are being respected, I can consider that the trend will continue. That's what the entire system is based on. If we're in an uptrend, I want to see bullish order blocks get respected, and I want to see bearish order blocks get ignored, right? So that's what you want to focus on. If we're bullish and we're in an uptrend, you want to see those bullish points of interest, OBs and things like that, be respected, and you want to see the bearish ones get ignored, and vice versa. If we're in a downtrend, you want to see bearish OBs get respected. You want to see bullish points of interest get ignored. Zogs, this is how I use the system. I think I've been using the M15 to find the third candle of the H4 reversal. The swing candle is what you're saying here. I don't understand what you're saying, so I'm not sure. I'm not using the M15 to try and locate the swing low per se. I mean, maybe technically, really what you're doing is if I think that this order block on the daily is going to be where the higher low is forming, I'm using the low time frame to find the exact moment that the low time frame, right, which is in a downtrend here, I want to pinpoint the moment it becomes an uptrend. And on the daily chart, this might just be one or two candles. But if you go down to the hourly, you might see the point where, hey, we're in a downtrend and then bang, market structure shift. That's what you're doing. How to determine what bullish bearish range to mark out? Is there a strict definition? Is a more visual thing? There's a strict definition, and if you've watched the videos, right, and you've gone through the education section, you should know what that is by now, right? The very first video I did, I go over this in detail, so make sure you watch that, right? Make sure you watch that. But effectively, you're waiting for price to make a high. So let's say this is price. Here's our swing high. I wait for it to break. Okay, now I have a swing low, and then I wait for a 3 candle swing. That's now my swing high, and this is your range low. This is your range high, and then I'm looking to buy the retrace into the order block. And then once it makes a new high again, new range low, wait for the 3 candle swing high. There's your new range high. But yeah, go watch those early videos because I go over that a ton. Lots of confluence with the trend, everything going for it. I think I answered that already. It's always the multimillionaires with the 5 up, 5 down. What the fuck's 5 up, 5 down? I was using H12 daily for POIs and general bias, so I'm using 3+ time frames like that. Okay, awesome, bro. How long do you usually keep using an OB in a setup? Mina, for example, has retraced all the way the OB I identified in the H4, but seems to be holding it. So are you talking about like this order block here or this kind of order block here? So I don't really understand what your question is. How long? I should have crazy fast internet, man. I'm telling you. Like I pay the max. This doesn't seem that fast. Hold on. Doing an internet speed test right now. Like, is this bad or is that good? I literally don't know. So I don't understand your question, Furkan. Maybe you can re-ask it. How long do I keep usually using the OB until it's invalidated, right? Good question. Does that mean you believe the next market ETH will be near this high? If you're asking me if my prediction for ETH is 20,000, that's not what I was saying at all. What I was saying, I was just giving an example of, let's assume it goes to 20K and you're buying spot. What is your potential ROI? That's all I was getting into. I wasn't trying to get into like predictions for how high I think things are going to go. Ollie, Maine, I was discussing prop firms with friends recently. They think prop firms are great for traders with small portfolios. My counter is that a small port trader is impossible and will lose. Then they say prop firms are also great for good traders. My counter is that great traders will always have a sizable portfolio to trade their own money. In your eyes, when is a prop firm a good idea? I think this is a great question. So I've used tons of prop firms in the past. In fact, I'm working on something in the prop space right now, as some of you may know. I'll probably be making an announcement in the next month with regard to it. I am a huge proponent of prop firms. Prop firms can give you leverage effectively. So instead of going with a $1,000 account and going onto a centralized exchange and then cranking it up and using 50, 100x leverage so you're able to open bigger positions, you can use your $1,000 and you could buy two $50,000 prop account challenges, which if you pass, you now have access to $100,000 of trading capital. Now you don't need to use 10x leverage because you have $100,000. So it's leverage in a sense. The advantages of prop firms are if you have a little bit of money, you can get access to a lot of money, assuming you know what you're doing. Now, to your point, right? a small portfolio trader isn't profitable. Well, that's not necessarily the case. I would say, yes, if someone doesn't have a lot of money and they're telling you they're a good trader, your response could simply be, okay, well, then trade your account up and make more money. The thing is, though, is if you are strapped for cash, you're living bill to bill, but you've been putting in a ton of time trading, right? And maybe you've turned your $1,000 account into $5,000. I mean, that's an incredible return. But what's going to take longer? Turning that $1,000 into 50 grand? Or if you think you know what you're doing and you have some, you could have a year of trading where you 5x your account, but your starting balance was very small. But by leveraging a prop firm, you get access to more money. Now, of course, lots of people suck, right? And if you suck at trading, you should not trade at a prop firm because there are very strict risk rules. But if you take your trading seriously, you think you're good, you follow risk management, it can be a huge tool to help grow your bankroll faster. Now, in my opinion, prop is a means to an end. The reason to take prop, in my opinion, is twofold. One, it's to get access to capital quickly and then generate payouts and then use those payouts to fund your personal account. Because in the prop space, you have rules. You have daily drawdown limits, maximum drawdown limits. There's a profit split. Usually it's like 70-30 or 80-20. Whereas on your personal account, you don't have any of that. Those rules, other than the profit split, are a good thing. You should have a daily drawdown limit. If I take 3 trades in a day and lose them all, I cut myself off, right? So I don't think that's a bad thing. But it's a means to an end. You should be taking that money you're making in prop and building your own personal account. Or because props are verifiable businesses in that you could trade prop for a couple years, be very successful, generate thousands and thousands of dollars in payouts. Now you have all this data proven in public that you can then go to a trading fund, a hedge fund, right? And say, listen, look, I proof's in the pudding, man. I've been profitably trading my strategy for 3 years at this prop firm. Here's how much money I've made. Here's all my statistics. And then you can go and leverage that into more money, right? So those are the reasons to use a prop firm. But I think there's a ton of value in prop. I used prop when I started out and did pretty well. Some of the most successful traders I know and who I talk to, Jade Cap, trades prop. He's got $1 million across several different prop accounts being all copy traded by one master account. So he's managing $1 million of capital and there's less risk, right? Because if you have $1 million of real money, right? Well, there's risk in different ways, right? But if you have $1 million in a personal account, technically you can blow that entire million. You get greedy, you keep doubling down, right? Like you can lose that entire million, whereas in prop, technically you can only lose about 10%. Now the risk is, let's say you blow one of your accounts. Well, now you don't have that money anymore, that access to that capital. So there's advantages and disadvantages. Overall, I think prop is really good and is a tool to be used by traders if you think you're good to get access to more capital. Because if you can stick to the risk rules, you can, on a $1,000 challenge, you can get up to 100K. That's crazy. How long would it have taken you to get 100K on your own? Probably a lot longer, right? What are your best narrative predictions for the next bull? GambleFi, GameFi, AI, whenever that may be. I agree with all 3 of those. Those are probably the biggest ones. I say GameFi because I am a fucking bag holder of Merit Circle. GambleFi because I own Rollbit token, RLB. And AI just seems to be kind of the new wave over the metaverse that we had last time. I don't know. Is there going to be a DeFi summer 2.0? I don't know. But I think the best performing coins for the next bull run probably don't exist yet. Or if they do exist, they're not on centralized exchanges and shit. But all 3 of those sound pretty good to me. Confirmed dog caused the crash. Exactly. Only 13 viewers, motherfuckers ain't grinding like we are. Exactly, man. I literally, it's crazy because like if you go to my YouTube and it's the Haven only videos, right? So go to YouTube Studio, go to content, Go to videos. When was the last backtesting video? So the backtesting video has 500 views. That's not bad, actually. The raid candle video has 230 views. Where's the gold backtesting video? Because that one should have a lot of views. I feel like. I don't know. Fucking YouTube's being whack. But yeah, I mean, where are the grinders at, man? Rune is holding up surprisingly. Would love to see your thoughts on a play chart. I think didn't I already cover Rune? Didn't we look at Rune? I gave you exactly what I would look for. Right? I would want to see it break below here, and then that would be the short I would look for. But right now, it's bullish. Right? So right now, it's putting in a bullish H12 SFP. So if that's the case, right, if this ends up being bullish, the problem is where's your MSB? It's way the fuck up there. So I would need to see more price action before I gotten along here. Got 4 minutes to close above here now, which it should, but then it's got to close the daily above here for it to be an SFP. So those are the two levels I'm watching right now. Main, about MMXM. Do you agree that price moves from external to internal, internal to external? Yes. If so, how do you determine your drawn liquidity? You're always going to want to start on the high time frame. The reason I give you guys the 12-hour, the H12, H1 system is because the concept is very basic, right? You have your bullish range here. Where is your internal liquidity? It's the POI. Right? Where's your external liquidity? Outside of the range and to the left. Internal to external, right? So if you're shorting here, where are you targeting? From external liquidity, we just made a fresh high, back to internal. So I'm giving you that ICT knowledge, but I'm simplifying it in a way more easy and digestible way. He's going to confuse the fuck out of you with all sorts of bullshit, whereas this is an easy way to present that information. But your draw on liquidity comes from the high time frame. A perfect example is oil, right? If you look at the weekly chart on oil, okay, there's got to be here we go. So we took out a key weekly high. That's external range liquidity, right? Where is the low of this weekly range? Here. Where's the internal liquidity? Here. Right? And here, in this fair value gap. So we took out external range liquidity. Now we look towards internal range liquidity for the next move. Right? So if we ran this high and you're expecting a pullback, to me, my eyes immediately would get drawn to this as the drawn liquidity. So I'm bearish based on the weekly. Then you go down to the daily, right? Or the 12-hour, whatever your preferred time frame is, right? You say, okay, well, what do we have here? Okay, well, we have a daily breaker. Here's your breaker, right? That caused the breakdown, right? Then you zoom in even more. You say, okay, how am I getting in here? Well, here is the order block that pushed us lower. Well, right here, you have a 4-hour fair value gap that broke us down below all these lows. Displacement. We came back and retested it. Remember, my drawn liquidity is down here after running this high. Zoom in even more. Within this 4-hour fair value gap, you have an hourly, or you have a 15-minute fair value gap right here. What do you have within this? Do you not have a 15-minute breaker right here? All right, so you're selling this move up into here based on us running this high up here, external liquidity, and then having a target of down here, you're looking for sells. So your bias was given on the weekly, and then you're refining down to the lower time frame to get that entry. Okay, so it closed as an SFP of the H1, but this still looks like dog shit. All right. Saw a question in the Discord. I'd love to see answered, so I'll post it in here. Have you noticed any of the other analyst systems often had a Confluence lineup with yours? Loma did a stream recently where I said a Haven member had made a great system by taking parts of systems. Listen, yeah. I mean, I can tell you when, just from looking at price action, I can tell you when there's likely an RSI divergence and when there isn't, right? Like really, what is going on up here? Right? Well, I could have told you that we had a bearish RSI divergence here, right? Like I could have told you that because I can tell based on the price action, the multiple sweeps, the breaker, that we're getting a loss of momentum, right? So yeah, there's Confluence. It's also just more so just like understanding that using RSI or moving averages or patterns, they're just a different way to view price. All those indicators are just a representation of volume and price, right? They're just a representation of volume and price. So if you understand how you can read price, you don't really need them. I'm not saying that they can't be used and they don't have value, but I can tell you when the moving averages are converging, right? And yes, moving averages are often going to line up with order blocks, for sure. Is it just MA? Oh, there we go. Oh, I didn't mean to do that. So let's do like a 10. And let's do SMA. Let's do a 10 and a 20. Right? Like, am I surprised that at the breaker, the moving averages crossed over and then provided resistance? Like, not at all. But again, I can also tell that, yeah, when the price is extremely bullish, the moving averages are going to be moving away from each other and stacking. But to me, like, I would much rather understand price action than these moving averages, if that makes sense. But yeah, there's often going to be confluences, and absolutely you can take things that I do, combine them with things that other analysts do, and make your own system. 100%. What do you think I did? Right? My system is a culmination of things that I learned over the years. It's not all ICT. A lot of it is, but it's parts of ICT that I liked. It's parts, some other stuff that I like. And then it's stuff that I, found through experience and put it all together. Right? So yeah, there's absolutely you can do that. Loma used to study shit from me back in the day, from my YouTube videos and my Discord, and then he made his own, system that clearly is way better than mine because he's way richer than me, that fucker. Okay, for the stream. Hello, sir. Will you be looking to compound your Nat Glass long, just so aware? The one thing that's concerning me about this trade is the big kind of rejection we had here. I thought we were going to break out finally, and then we, rejected hard and we're retracing. The problem is the dollar being super strong is not helping this position. So I don't really want to compound. I've made great money on it and I'm still holding a good chunk of it. But I have no interest in compounding on this trade personally. If we were to make a higher high on the weekly, so if we broke through here, or at the very least here, the next area to compound would be a retest of the weekly order block, right? So if we can break up, retest of there, just like we did here, right? We broke up, retest. So if we break up and then get a retest, then sure, you could compound there, but the dollar needs to cool off if this is going to go up. For the stream, can you talk about how you define your trading range again? I notice sometimes you're very strict, placing a range high at the immediate recent swing high low. In other cases, they go further back. They shouldn't. If I'm trading the H12, H1 system, right, it's literally you're just tracking price. I don't know how many times I can go over this with you guys, right? But you need to get in your charts and just start doing it. So I go and I pick a major break point, okay? So it's here. Here's the low that generated that high. As soon as this low breaks, right, I'm looking for a 3-candle swing low to form. It's here, breaks again. We now have a 3-candle swing low here. Okay, breaks again, 3-candle swing low here. The range high is the swing high that led to that break. We break again here. Here's your swing high. We break to the upside. Here's your low, here's your high. Break to the downside. Here's your low, high. Perfect retest there. Breaks down again. Here's your high. There's your low. This remains your range for a while until we break down again, right? And it's just over and over and over again, right? So this was your high. This was your low. Broke below the low. There's your high. Here's your new low. This was your range. Broke below the low. There's your high. There's your low. Broke above. There's your low. There's your high. There's your low. There's your high. Broke down. There's your low. This is the high. Over and over and over again. So that's the rules for the ranges on the H12, H1 system. It's just picking those over and over and over again, and you're just going to get good at it through practice. Like, this is the range. Here's your high. Here's the low. We've been in this range now for 8-9 months. But yeah, go watch those videos from the start in the education channel if you need further clarification. But just practice, and send me charts. Tag me, be like, is this the right range? Need to do my own research and back testing into it for sure, but I'm curious if you've ever tried CBS's RSI, AO, or maybe peers moving averages with your system if it added too much complexity. Why try and change something that already works for me and that I've been doing for years? This goes back to my free throw example. I've been doing this for 7 years. Why would I try and add something now? I'm more interested in refining what I already do as opposed to trying to add something completely new. If you're new, by all means, take the stuff that works for you. But what worked best for me learning was pure price action. So that's just kind of what I've stuck with. Doesn't mean you can't add the confluences. You can, but like I just showed you, a lot of this shit overlaps because it all begins with price. CBS uses RSI, uses the awesome oscillator and Renko, but at the end of the day, he understands price action, right? Here's an example of an OB that worked twice. So I would venture to say that the second touch is this order block here, not this same one. It looks like, yeah, it comes and tags that again, sure. And it's still a valid zone, but we made a new low based on this order block, which is that touch. This now he says here's a bullish OB that worked the first time, failed the second time. I don't know what all the fuck this is. I'm very confused as to what you're showing me here. Okay, so yes, we had an H12 order block here. It gave you the reaction. It made a new high. So now this is your H12 order block. And it failed. And now what is it? Now it's an H12 breaker. So I don't really understand your question, to be honest with you. I went back and watched your very first video a few weeks ago and noticed that someone in your Telegram group you talked to in it was a guy I used to game with. Had no idea he was into crypto back then. What was his name? Give me his name now. I use CoinAnalyze for the H12 chart on crypto. Is there any site I can use the H12 chart for free for FX? Yeah, TradingView, you have to pay for the 12-hour. Pet Zerling. Sounds kind of familiar. Was his avatar a cat? Okay, glad to hear, Zane. Anyone got any other questions? Goes by Yummy TV these days. He plays WoW. Okay, yeah, I don't know. I don't remember. He does have an avatar cat with a waffle on it. Sounds familiar, but like 2018's 5 years ago. I'm fucking old, bro. 33 for fuck's sakes. So old. Anyone got any other questions? I sometimes just feel like doing this, like just doing a video and having you guys be able to, ask the questions on video. Helps as opposed to, asking in chat. It's just way easier to explain things in video. Is there any special conditions that make your trades better? I mean, listen, when the market is overall bullish and everything's going up, it makes longing easier and vice versa. He says, like SFP, small wick, size of range. Okay, so if a range is super tight, I don't like it as much. I like the range to be decently expansive so I can very clearly see the levels I'm working with. But yeah, wide ranges I like, hard trending markets I like. They make life easier for sure. At the closes, we're a bit long. I'm getting smoked. All right, fellas. Okay, I hope you enjoyed. I'll try and do some more of these. It's way easier to answer questions in this format than it is in video or in text, excuse me. But yeah, hope everyone has a good day. Talk to y'all soon. Stay safe out there. I didn't long here, right? Remember, no MSB, so there was no new long. Looks pretty ugly. We're just going to have to hold that swing short, see what happens. All right.